Welcome again, everybody. Thank you for showing up here today. My name is Alex, and I'm the head of support for Aplos, and we are the company that's hosting this webinar, as you know. And what we're going to be going over today are fund accounting basics for nonprofits. And if you're a church and you're in here, this will apply to you as well, but the terminology that I use will be a little more nonprofit specific. So just keep that in mind. But the whole of the content will be applicable to just about anybody that has use of fund accounting. And what we're going to be going over today, again, is kind of the fund accounting basics, but we're going to answer three main questions about your accounting today. The first is going to be, what is accounting? We're going to take a very basic look at what accounting is and how you can begin to understand it and use it for your organization. Next, we're going to take a look at what is fund accounting. So how does accounting work, but then how does that kind of change, or how is it different for nonprofits and churches, specifically with fund accounting? And then lastly, we're going to take a look at the question of, how do I keep track of my organization's finances? Okay, so those are going to be the three questions for today. So let's take a look at the first one. What is accounting? Well, in short, accounting is keeping track of your stuff. And really, that's kind of an overarching general description. But really, it boils down into 5 different areas that you're going to track. And these are the 5 areas of accounting. And this is the money that you own, so your possessions, money that you owe, so your debt or payables to anybody else, the ways that you get money, otherwise known as your income, the ways that you spend money or your expenses, your bills, and then it all kind of boils down to your overall worth. And so using these 5 areas of accounting, you can begin to keep track of things for your organization. And in accounting, these 5 different areas have some unique names here. So the money that you own is referred to as your asset, or assets, plural. The money that you owe, so again, your debt, is called your liability. Okay. The ways you get money is called your income. The ways that you spend money is called your expense, and then your overall worth is known as your equity. So let's take a look at an example real quick. So let's say we're going to use an example of personal finance here. So let's say that at the beginning of the day, you have $10,000 in your bank account, which, first of all, congratulations, that's great. But you have $10,000 in your possession right now, and that is money that you own. Okay, it's yours. You possess that money. So therefore, it's an asset. You can see right underneath the little house there. There's my beginning balance of $10,000, and that's my asset. So then I go to work and I get a paycheck, and let's say I earn $1,000 worth of income, and so that is money that I am receiving. So therefore, that's the other another area of accounting right there, is the ways that I get money, right? So there's income for $1,000. So with that $1,000 of income, my new balance of my personal asset, the money that I own, is $11,000. Okay. So next, moving down, you have expenses. So let's say I pay my car payment, and I buy some pizza and keep the lights on, all of my bills for the month, and those come out to about $800 worth of money that I am spending, otherwise known in accounting as your expenses. Okay, so I had the $11,000 after my income. I spent $800. So at the end of this example, at the end of the day, I now have $10,200 as my new balance of my asset. So again, going back, I had 10, I made 1,000, which brought me to 11. I spent 800, so now I have $10,200 in assets. And so this is an everyday thing that you're going to go through. So you have money, you spend money, you make money. I mean, that really is accounting right there. So those are only 3 areas of accounting: the assets, income, and expense. So how does this play into your liabilities and your equity? Well, let's take the other half of the example and say that $10,200 that I have, again, is money that I own. It's mine, right? But is that really what I'm worth? Is that how much money that is kind of, overall, how much worth I have as an individual? Well, let's say that I have $5,000 worth of a student loan outstanding. So this would be considered my liability. It's debt. It's money that I owe somebody else, okay? And this actually counts against the money that I have. So I may have $10,200 in the bank, but I owe 5 of that to somebody else. So really, at the end of the day, what I'm truly worth is $5,200, which is what I call my equity. Okay. So this example altogether looks like this. So again, $10,000 that I had, I made 1,000 of income, so now I've got 11. I spent 800, so at the end of the day, I've got $10,200. Now I have $10,200, but I also owe 5,000, so my overall worth there, my equity, is $5,200. Okay. Now, again, you use this on a daily basis. So you track the money that you make from your jobs, the money that you spend on your bills, and then how much you have left over and how much you owe. So accounting is, again, just keeping track of your stuff. It's keeping track of how much you make, how much you spend, what you owe, how much you have, and then what do you kind of boil down to of your overall worth. So oops, sorry, let me, oops, 1 second. Had a little technical difficulty here. Okay, so let's take a look at the second question here. What is fund accounting? So accounting, again, is keeping track of your stuff. And then fund accounting is actually a different category. It's a further detailed process of accounting that churches and nonprofits use that focuses on accountability rather than profitability. Excuse me. So any organization, whether it's a business or a nonprofit, you want to know whether or not you're profitable, whether or not you're making money. But the purpose of fund accounting is to not only track profitability, but this concept of being accountable. So with a church and a nonprofit, you have need most often to keep track of designated areas within your organization. So to use the example of a church, right? So if a church has a general fund where all of your kind of tithe and all your money comes in, and that's kind of your main source of income there, that goes into your kind of general purpose where you pay the bills and you pay your employees and keep the lights on. That's kind of your general fund. But then let's also say that you have a missions fund and a building fund. So that's two other areas within your organization that you are kind of stashing money away or aside for whatever designated purpose. Now, each one of those funds is going to have its own balance, its own income, its own expense, even its own debt and overall equity. So it's like almost keeping track of little mini organizations within your larger whole. So to use another example of like personal finance. So personally, you have a bank account and you have bills and you have your income, like the example we took a look at. But if you want to stash away money to go on a vacation, then that would be the concept of a fund. So that's money that you get, and then out of my money, I'm kind of portioning out a certain amount towards this different purpose, which would be a fund that you want to keep track of. So again, here's an illustration. So you have your money, and then you distribute that money to different things. So here's the money I have set aside for my building, for my missions, for my operations, different things. So here's an example that we can take a look at here. So let's say that you have $3,000 in your checking account as a nonprofit. Okay, this is money that, again, you have received through donations and just gained through revenue maybe, and then you spend to keep the lights on, and then you apply for a grant, and this grant gives you $5,000 more dollars. But this grant has a unique purpose to it. So it has to be spent in a very specific way. So when you receive this check for $5,000 and you go to the bank and deposit it, your checking account all of a sudden goes up to $8,000, but you know that only five of it is really only five of it is kind of set aside from everything else to be used for that grant's purposes. Okay, so that's where this fund accounting comes into play. So fund accounting would allow you to take a look at your checking account and see not only do I have $8,000, but 3 of it is for me and 5 of it is for this fund that I need to keep track of separately. Okay. So when I coach people on how do you figure out what a fund is for your organization, so do I keep track of a fund for my Amazon account, or do I keep track of a fund for a different campus or something? Really, if you need to answer this question here, do I need to know how much money I have set aside for blank? The answer to that blank, most often than not, is going to be a fund that you want to create. So again, a fund has its own balance. It's got its own income, its own expense, its own ongoing worth. So if you can answer that question, write those down, and the answer again to that blank is probably going to be the name of a fund that you want to create in your fund accounting system. So the third question here, how do I keep track of my organization's finances? So as a kind of a quick recap, we talked about accounting, and accounting is keeping track of your stuff, right? The money that you own, owe, receive, spend, and your overall worth. Fund accounting snaps another piece onto that. So it's still accounting, but it's accounting for each kind of division or fund within your organization. So to track this, to keep track of those ongoing balances and the money you're receiving and spending and all that kind of stuff, you want to have what's called an accounting system in place. And an accounting system, most commonly these days, is a software, but it's really a software or a process put in place to keep track of those 5 areas of accounting, which again are your assets or the money that you own, your liabilities, the money that you owe, income is the way that you get money, expenses is the way that you spend the money, and then your equity being your overall worth. So a software or a system that tracks all of this. And an accounting system has 3 primary aspects to it, or 3 basic functions. The first is to set up accounts. And we're going to take a look at each one of these here in just a second. But at a high level, the accounts that you set up are like line item categories to represent those 5 different areas. Okay, we're going to take a look at that here in a second. So you set up your accounts, and once you have your accounts set up or created, you can use them when recording transactions. And a transaction is a movement of money somehow through your accounting system. So either getting money, spending money, transferring money, paying bills, receiving invoices, all that kind of stuff are all examples of transactions that you would enter. And then lastly, once you have your accounts created and your transactions entered, you can pull a report or series of reports to basically answer questions like how much money do I have, how much money have I made, how much money do I have set aside for my funds. Reporting is kind of what everything boils down to in an accounting system. So let's take a look at accounts here first. So accounts, again, is the first aspect in any accounting system, and that's to create a line item or a category for each of the 5 different areas of your accounting system. So those 5 areas: assets, liabilities, equity, income, and expense. And each category or each type of account has its own kind of thousands range that the account numbers are typically created in. So for assets, they're typically created in the 1,000 account range. Liabilities are 2,000s, equity is 3,000s, income 4,000, and expenses are 5,000s and above. Now, the reason for this is really to just keep everything kind of consistent and above board. So when you go to any organization really and take a look at their financial statements, they will most likely have a very similarly kind of looking chart of accounts with these thousands ranges. So it's a lot easier to stay consistent with other organizations this way. So let's take a look at assets first. So assets, again, are numbered in the 1,000 range, and any account that you set up is going to have a number and a name. So here's my assets. So again, assets are money that you own or possessions that you have as an individual or an organization, whatever you're accounting for. So you would give the account a number like 1,000, and then you would have a little dash or a colon or something, and then have a name that is descriptive of what the account is representing. So for instance, the money in my checking account. Okay, that's asset, that's money that I have. So I'm going to create an account to track that, and I'm going to call it 1,000-checking. Okay, same thing with my savings accounts, 1,001-savings. So going forward, these accounts would be used to represent those balances in my bank accounts. Other types of assets that you can have is invoices receivable or accounts receivable, which is money that is owed to you, but you just haven't received yet. You can also have possessions like inventory or fixed assets, as well as land or buildings. So for any possession that you as an organization own and need to report, you would create an asset account for that, like so. Okay. The next is liabilities. And liabilities, again, is any money that you owe or debt. And those are going to be numbered in the 2,000s range. So you can see here I have accounts created with 2,000, 2,100, 2,200, and then dash, and then a name that is descriptive of what the account is representing. So like the earlier example used, I had a school loan, balance, debt. I would create a liability account to represent that money that I owe somebody else. So I'd give it a number in the 2,000s range and then call it student loan debt or whatever. So here I have a couple examples: accounts payable, which is short-term money that you owe somebody else; your credit card balance, your property mortgage, your outstanding the money that you owe on a building; your vehicle loan, payroll taxes. Again, all money that you owe someone else or some other entity but just haven't paid yet would be considered a liability. Okay. Your equity is in the 3,000s range. Now, this differs quite a bit for churches and nonprofits. So with a business, equity can be a number of things. It can be retained earnings, it can be stockholders' equity, it could be stock value, it could be a lot of things. But with nonprofits, it can get pretty detailed as well, but as a kind of a high level overview, your funds are going to be created as equity accounts in your accounting system. So like I used earlier, the general missions and building fund, let's say I also have a special projects fund. So again, these are areas within my organization that need to be tracked separately. They have their own kind of residual value. They have their own balances, their own income and expenses. So they're like completely separate entities within my organization. So I would create an equity account to represent their balance, and that would be 3,000 something, so 3,000, 3,100, 3,200, and then general fund, the missions fund, building fund, special projects fund. And these accounts, through the use of transactions and keeping everything kind of in line, would track my overall balance for my fund that I have created. Okay. Next, we have income, and income and expenses, which is next, are kind of they're the easier accounts to kind of think of and track and explain, because these are the ones you're going to be using on a more daily basis. So income is numbered in the 4,000s range, and income is, again, any way that you receive money. So not any person that gives you money or anything that gives you money or any place that gives you money. This is any way, any avenue of money flowing into your organization. So you can see here I have some, some examples. I have 4,000 contributions income. So any money that I receive via contributions, I would use this income account. Same with designated donations, anything that's kind of being tucked away for whatever purpose, I could use that. Pledge income, grant income, sales revenue, any way that you receive money, you're going to want to create an income account for it, with a number in the 4,000s range and a name that is descriptive of the way that you're receiving the money. And then lastly, here we have expenses. And expenses are in the 5,000 plus range. And the reason for the plus is, well, because it's last, and so you can do whatever you want with it. But really, you have more expenses than you do anything else most often. So expenses are ways that you spend money. Again, not places or people that you pay, but ways that you spend money. So salary expenses, rent or mortgage, office supplies, meals and entertainment, fundraiser supplies, utilities, equipment, anything that you purchase, any way that you want to spend money would be an expense account, again, with a kind of 5,000 plus range number, and then a name that is descriptive of the way that you're spending money. So at the end of the day, you have all 5 different types of accounts represented with their respective accounts. So assets, liabilities, equity, income, and expense. And the total list here, all of these accounts, make what's called your chart of accounts. You may have heard this before. And a chart of accounts is really it's a fancy way to say your listing of accounts for your organization. So when someone says, hey, on your chart of accounts, do you have a category for, this fund? You can take a look at it, tell them yes or no. So that would be your chart of accounts. Okay. So in an accounting system, we had those 3 areas: accounts, transactions, reports. So this is accounts. Now what you do is take those accounts and you enter transactions. And a transaction, again, is any kind of movement of money within or through your organization. So this can be things like items purchased, so expenses that you have made and now you've gained items. Revenue, so you sold something and you made $1 off of it, that's revenue. Donations, another way of income. Debt paid, which would be kind of an expense, but also kind of a liability movement as well. Bank transfers, so not income and not expense, but just moving money from my checking to my savings account. That is still regarded as a transaction. Invoices sent, so if you're writing up an invoice to send to a customer to say, you now owe me this amount of money, that is income and assets and a couple other things at play. And then fund transfers, moving money, kind of changing hands. So if I was going to, not a bank transfer, but, if I have within my bank, if I have $5,000 tucked away for my missions fund, but I want to transfer some of that back to my general fund, that is a fund transfer. So you can kind of change hands, move money around. And that is also considered a transaction. Now, transactions is it's a very deep topic, and this is really where the wheels come off for a lot of people. And the reason being is because it is so broad. I mean, these are only 7 examples of transactions, but this goes into a billion other things. So what I do typically here is pause and kind of push this off to the side and say, if you want more information on how to enter transactions, what the difference between single and double entry accounting is, as well as how do debits and credits play into the whole mix, not debit and credit cards, but debits and credits in an accounting system. That is something that we would be more than happy to provide. But for today's purposes, because that we can kind of follow the rabbit on that for a while, I'll pause on it. If you have any questions, let me know. But just keep in mind that a transaction is, again, a movement of money in or within your organization that uses your accounts to kind of track balances. So lastly, we have reports. And a report, again, is kind of the answer to a question like, how much money do you have? How much money have you earned or spent within a given time frame? Or how much money is set aside for your funds? People can also ask you, or you might ask yourself, how much money have we spent on office supplies in the past 6 months? Or how much money have we gotten in donations versus last month, this month versus last month and the month before, or even the year before? All of those questions are answered by reports, okay? And with nonprofits, there's kind of 3 primary reports that the IRS has deemed. And the first one here, Statement of Financial Position, is the first one we're going to take a look at, and that's more commonly regarded as what's called a balance sheet. You also have the Statement of Activities, which is more commonly known as the income statement. And then you have a more kind of specific report that is unique to fund accounting called the Statement of Functional Expenses. But let's take a look at the balance sheet first. So the balance sheet shows what's called the accounting equation, which is essentially your assets equaling your liabilities plus your equity. An easier way to describe this is your assets minus the money that you owe equals your overall worth. So remember the previous example earlier on where I had $10,200, but then, so that was my asset, that's money that I had, but then I owed money for $5,000, so that means my overall equity was $5,200. So here's another example. So all my assets here on the left-hand side, I've got cash in my checking account, accounts receivable, and grants, all of that equaling $19,000, okay, total assets. And then to the right is the other half, so liabilities. I owe $10,200, and then I have a loan for $5,000 as well. So that means my overall equity is $3,800, which is totaling $19,000 as well. So whether it's assets equaling liabilities plus equity or assets minus liabilities equal equity, both of those accounting situations work. It's more commonly known as the assets equal liabilities plus equity, but again, the math is the same, so it doesn't matter. So that is your balance sheet. Now, the balance sheet and the next one, the income statement, are the 2 primary reports that you're going to want to generate for your board and for anybody that kind of wants to know the financial position of your organization. And secondly here, the income statement. The income statement shows the profitability of your organization within a given time frame. And this is a different kind of equation, but it's your income minus your expense equals what's called your net income. So the money that you've gained minus the money that you've spent is your overall profit or loss for the period of time that you're reporting. Okay. So here's an example. On the left-hand side is just a really big picture, and then on the right is the actual sample here. So I've got my income. I've got cash donations for $10,000. I've got grant income for $7,000. So I have a total income for whatever time range that is of $17,000. Below that, I'm going to list my expenses. So in my expenses, I've paid rent for $4,000, payroll for $8,500, utilities for $800, office supplies for $4,000. So my total expense for this time period is $13,700. So income minus expense, 17 minus $13,700 equals a net income or profit of $3,300 for the time period. Okay, so that's your income statement. So balance sheet shows your kind of snapshot of here's how much money I have, owe, and my overall worth. The income statement shows kind of how you got there, but within a certain time frame. So how much money have I received and spent in the past, month or year, whatever you want to report. The last report here, I don't have a real good example, but the statement of functional expenses shows your organization's expenses broken down per fund and category. So, for instance, you would have let's say office supplies, or I guess we'll just run with administrative expenses. So let's say I have an administrative expenses account, okay? That's one of my accounts that I track. I'm spending money using this account. This report would show not only how much money have I spent with this account overall, but how much of that was for Fund A, Fund B, Fund C. So again, not just what's your total expense, but what's your total expense in detail broken down per fund that you have created. So that is the statement of functional expenses. So recap, what did we learn today? Well, we were going to answer 3 questions. The first one was, what is accounting? And accounting is keeping track of your stuff. So the money that you own, owe, spend, receive, and your overall worth. All of that boils down into the process or practice of what's called accounting. Fund accounting is a division of accounting. It's a further kind of classification that basically means you're tracking not only those 5 different areas, but those 5 different areas for each fund that you have as an organization. Which again, a fund is just kind of it's a distribution. It's a division within your organization that has its own balance, its own income, its own expense. It's got its own kind of operation going. And then lastly, how do I keep track of my organization's finances? So if you need to track accounting and specifically fund accounting, you're going to want to do so through an accounting system, which would be used for your organization. And in an accounting system, you have 3 kind of primary areas, which is to set up a chart of accounts, and then to use those accounts in transactions, which will then bleed into your reports, which are answers to questions that either yourself or people will ask of you that you can generate based on the other information that you've entered in your accounting system. Okay. So now it's time for my quick and shameless plug. So again, my name is Alex, and I'm the support guy here at Aplos, along with our team of support representatives. And what we do on a daily basis is help people get set up with Aplos software. Now, Aplos Software is an online company that provides a couple of different products. The first is accounting. So all the stuff we just learned, we have an accounting system online in place for you that tracks the fund accounting for your organization, and we can teach you how to use it with no cost to you. Well, the software costs, the support doesn't cost you anything. That's what I meant. So we have accounting, and then we also have donations, which allows you to track the money that you've received through donations, but also kind of further track your donors, how much they've given. You can also donate online to you via your website, and then you can generate contribution statements for them at the end of the year. We also have e-filing capability. So if you are a nonprofit that needs to file the 990 series, either the Form 990N or the 990EZ, we can e-file that for you to the IRS. And we also have oversight. And oversight is a tool that you can use if you are a individual or a business that has to keep the books for multiple organizations. So we have a number of clients that use us with oversight, and they oversee multiple organizations for either financial accuracy, or maybe they're providing a service like a CPA or a bookkeeping company to have access to multiple accounts, but all kind of within the same one login. So that's oversight. And then lastly, we will be coming out here pretty soon with another product called Donor Relations, which will allow you to further keep tabs on your donors. So you can link family to one another. So if Alex and Beth have both donated to me, to the organization during the year, instead of them receiving a separate giving statement, you can combine them, report them together. You can also link different family members. But the biggest functionality that's coming with this is being able to email from the system. So if you're familiar with a Constant Contact or a MailChimp type program to be able to send promotional or campaign emails, that is what we're working on right now. So the benefit of all of this, now all of these products can be found elsewhere, but to have all of them within one simple to use system that all is integrated with itself, So again, the donations that you enter will go into accounting, and then the donors that you just recorded can get an email from donor relations, and then you can e-file. All of that stuff is all wrapped up into one system for you, which is known as Aplos. So all the products can be used independently, but together is where they really start to shine. So if you're curious, if you'd like to start a 15-day free trial, we have that available for you. There's no commitment needed, no credit card needs to be entered or anything like that. All you do is click that blue button on our website. That will start you with a 15-day free trial that you can start any one of our products and give that a shot. And again, all of our support is free, and we'd be more than happy to answer any questions or help you get set up in our software.